As seemingly endless, infinite bailouts keep getting announced day after day and trillions more are promised to be delivered, we wanted to give you an update on the ongoing silver and gold bullion shortage, which is becoming acute. In last week's ending SD Bullion market update, we shared with you breaking news over the Royal Canadian Mint's recent bullion production shutdown. Huge lockdown news occurred yesterday for the physical silver and gold market. Anywhere from 1/3 to 1/2 of the world's entire yearly physical gold supply capacity is now on pandemic lockdown. Valcambi and Pam Suisse stated they would be shutting down for a minimum of 1 week, and there'll be a 2-week shutdown for Heraeus. The South African mining industry is also on shutdown, and it can be surmised that the Rand refinery is likely already too shut down or on the cusp of being so. And if you've been watching this viral update, and especially the underestimation trends ongoing, it would not be wrong to fear that these large gold bullion refinery shutdowns may last well longer than a mere few weeks. Hello, this is James Anderson speaking on behalf of SDBullion.com. This morning we awoke to see that the worsening physical gold bullion shortage situation forced COMEX futures prices violently upwards, touching near $1,700 per ounce this morning. The over-the-counter gold spot price and COMEX gold futures front-month price blew out to 45-year record-high divergences. It appears traders have begun selling spot gold to escape to COMEX futures front-month derivative contracts. Perhaps many are thinking they will be able to demand physical gold bullion derivatives from the COMEX, as the spot price market is not cooperating with any physical gold bullion at these spot prices. Ole Hansen, head of commodity strategy at Saxo Bank, stated this morning the following: "There is no price discovery in the market right now. If you need to borrow gold in the OTC, over-the-counter markets, right now, you're going to pay a king's ransom." Adding to the refinery shutdown trend are logistics problems, as this pandemic has decimated supply chain shipments across the world. The gold market is drying up because almost no traders working from home in London have access to for sale or deliverable physical gold in the approved forms. Peter Hobson, writing for Reuters, stated the following: "The London Gold Bull Market Association, LBMA, and several major banks that trade gold have asked U.S. exchange operator CME Group, Inc. to allow gold bars in London to be used to settle its contracts to ease disruption to trading," sources said. The gap between gold futures on the CME's COMEX exchange in New York widened above London spot prices by as much as $70 per troy ounce, or 4% on Tuesday. Two usually remained within a few dollars of one another, and the gap skewed trading in the London market, causing activity to fall. Traders feared shutdowns of air travel and precious metal refineries due to the coronavirus outbreak will make it harder to ship bullion from London to the United States to meet contractual requirements. London is a supposedly key gold storage center where thousands of tons of metal underpin trading, but it uses 400-ounce bars, which must be melted down and recast as 100-ounce bars to be accepted by COMEX in New York. The LBMA and executives at major gold trading banks asked CME Group to allow 400-ounce bars to be used to settle COMEX contracts, said the two sources, both of whom were involved in the discussions. No one was immediately available for comment at CME Group after Reuters contacted the company via phone and email. The rule exchange would obviate the need to reshape and transport metals, meaning it could remain in vaults in London while ownership is transferred. If this happened, spot and futures prices could converge, and markets could trade normally, sources said. So if you're on the COMEX futures market and you're demanding delivery, then LBMA will just tell you there's 400-ounce gold bars sitting in a vault somewhere for you. Good luck with that. So I'd like to give you, the viewer out there, better context as to the size and scale of the physical gold refinery shutdown now in place. Now 50 to 80 million ounces, or 1/3 or more than 1/2 of the annual gold supply capacity, is on shutdown. Here is the most popular gold ETF called GLD, which, if it were to go back to its 2010 to 2013 all-time high levels of supposed gold bullion held within its trust, would require the entire gold COMEX warehouse at the moment, and 1 million or more ounces on top. Both this highly leveraged derivative gold futures market called the COMEX and the unsecured shareholder exchange traded fund called GLD They combined together hold only 1 ounce for every 159 ounces of physical gold throughout the world. As more gold bullion demand comes into this market, we'll keep seeing the price of gold bullion products fully diverge higher in both bid and ask prices above gold spot futures, and certainly the ever diverging lower GLD fund as unsecured shareholders pay 0.4% per year for the privilege of perhaps trading, or worse, holding a derivative that's not real gold bullion. It was only about a month ago here at SD Bullion that we warned our followers about $2,000 an ounce gold destiny denominated in fiat Federal Reserve notes and how inevitable it was given the inputs. Almost no one could have guessed it was perhaps coming this fast. Physical gold bullion shortage price premiums will likely be hitting $2,000 per ounce soon, given the high disconnect between supposed spot prices and the real physical bullion buying and selling world. Both gold bullion's bid-ask spreads, the price you pay and can sell them at, are likely to keep rising compared to supposed spot and futures prices. As for GLD, only trade within it what you could stomach having either fully frozen and or devalued further to the real precious things. That's all for today. Stay safe out there. If you enjoyed this content, be sure to give our video a thumbs up. If you're not subscribed to our channel, do that. And finally, be sure to hit the alert button so you don't miss these market updates as they come along. Give us your comments below. Let us know what topics you want to see more coverage on.